So step one, we look for a fair value gap. So we have a 15-minute fair value gap just over here. And our job as traders is to simply catch this lower time frame wick and ride price to the upside. It's pretty much as simple as that, but there's a few things you want to look for. So step number one is understanding 15-minute fair value gaps are very important. Step number two is, of course, having the patience to wait for the fair value gaps to be hit in the first place. So let's quickly break down how price has done that. So now that we're on the 1 minute time frame, the first thing we should highlight very quickly is that we have some equal highs up here, and we're waiting for price to get down to this level before taking any potential longs. Okay, so if we just continue to play price on, what we can see over here, now price has entered this zone over here. We also have some sell side liquidity prices also taken out. So it's important to understand where the buy and sell side liquidity points are. So step number two is we're waiting for a mitigation into the zone itself. So that's step number two. We want to be waiting for price to get into the zone itself. Okay. Now from here, we need to pay attention to the fair value gaps on the lower time frames. And this is essentially step three of the strategy. So we have a fair value gap over here. What we're looking for is essentially very simple. Now that we've had a tap of a higher time frame level, a 50-minute level, we're waiting for price to kind of break this zone. And then we want to be entering off the reaction of this zone. This is pretty much how the strategy itself unravels. So when you see aggressive sellers that aren't being rewarded, that's a bullish fair value gap. In fact, when we go over here and look at the numbers, we read the order flow. What we read over here, some numbers that stick out to us. You don't need to read every single number. You need to read some of the key delta points at key levels. So you're not reading every single number. That would be impossible. But you're looking at some key delta that stick out to you. 56 for only 3. And then down here, we had 4 for 0. And we also had 102 for 10. This is a 10x. So there's 10 times as many sellers as there are buyers. But despite that, the market failed to break below the fair value gap. Now, once we see the price action over here, what we can start to say is, okay, the fair value gap is holding. It's time to get long. Even over here, as price breaks the fair value gap, price is beginning to break above the fair value gap. But when we read some of the numbers, we read, for example, we have 79 for 12. Again, there's a lot more market participants that are aggressively selling than there are aggressively buying. And what that tells us is that when there's more aggressive sellers than buyers, the level is being held by passive buyers. So we see passive buyers that are propping up. And this is what we mean by the absorption cycle. So the absorption cycle typically occurs over about a 10-minute period. So we're seeing a lot of aggressive sellers, and a lot of aggressive sellers. They're being absorbed by passive buyers. So when you see aggressive sellers that aren't being rewarded, that's a bullish fair value gap. This tells us that the fair value gap is strong and you want to be looking for sells, right?